Hello everybody, welcome to the TraderMerlin Show. Happy hump day everybody. It's Wednesday out there, another nice upside move for your equity markets. 3 days in a row where you've seen some nice gains. For those of you who might be regulars to the program, you know I switched the formula here a little bit. Normally I do a market update to start, but I figure I don't want to keep my guests waiting in the wings for so long. So we'll just start the show with what we're going to talk about initially, which was the topic of managing the trade. The reason for this was I was actually in a webinar. It wasn't really a webinar, it was kind of a meeting of the minds over there at Traders Army, and Justin was talking about one of the trades he was in gold, and it was a trade that it has all set up, mapped out, entry, stop, target, started to rally, and I thought, you know what a great topic to talk about, trade management. So today we're going to have Justin Krebs on the program. Justin, how you doing?
Hey, Merlin. Good to be with you.
Good to have you with us as well. There we go. Got your video up on screen. It's been a while since I've had you on, my friend. How you been? Ooh, look at that profile.
I've been I've been great. It's actually loving what you're doing with the show. It's awesome. I really think you've made a lot of really great improvements since going out on your own, and I'm actually honored to be on here with you.
Oh, well, somehow I have a feeling you'll be more of a regular coming up here soon. Let me, and thank you very much for the kind words. I appreciate that. Let me start off with 3 simple questions. I like to call it kind of the trader's profile out there. So I'm going to throw in a nice little graphic for our trader's profile. And those 3 questions are rather simple. How long have you been trading? What instruments do you trade? And what is your trading style if you had to nail it down to one?
So how long I've been trading? I was actually trained at Online Trade Academy, and I came in as a student about 2006. So kind of dabbling in it at first, but kind of got really serious about mid-2007. So I would say about 13 years I've been trading. My instruments that I trade, I primarily stick with futures and Forex, although obviously, my long-term portfolios, I'll get into some stocks and ETFs and options more for protection. I wouldn't really call myself an option trader, although, hanging around with guys like, yourself and Corey and Chuck and stuff like that, but obviously I, feel like I should learn more about options. And then if you had to describe me, I'm very much a very simple swing trader, basically. I prefer to find trades that I can be into for basically 1 to 3 days. That's my sweet spot. I like that. Although I'll trade anything in any time frame, my sweet spot's one to few days, and depending on how it moves.
Cool. All right. Well, that was easy. We got the trading for 13 years since 2006, and you're like me, you're an Online Trading Academy graduate. Although you probably were interested before, but you realized I need education. You went down that path, and that's what I did. Futures and FX, also trades a little bit of options, and a swing trader is his sweet spot. But as everybody you'll ever meet that trades in the financial markets, we might say that we are a swing trader, but you know what? There's times where you look and you say, I'm taking this day trade, or something just ends up being much longer. Now, Justin, that runs me into the topic for the day, which was managing the trade. And, one of the things I know that you've excelled at, certainly in your golf career, is discipline. And discipline is critical in success in the financial markets. You and I know that very, very well. Stop losses, those types of things. But managing the trade, I think, is critical. Walk us through the importance of managing the trade and maybe some of the things that you do. And I know you had a great example on the gold trade you guys made at Traders Army a couple of days ago.
Yeah, honestly, I prefer to be as much hands-off as I can on a trade. I've learned, and I still continue to learn, that I am sometimes just absolutely terrible at actually monitor things. You know what I mean? Like I have a plan, and if I just stay away from the computer, usually it works out fairly well in my favor. But the moment I start tinkering, because I think one of the funny things about us being around all these other traders and being educated for so long and hearing this and hearing that is that all these things are logical and they make sense that you hear, right? Mm-hmm. So you start to like, man, how can I integrate that into what I'm doing? Is that going to make so you have all these things, these chart patterns, these indicators, these correlations, market profiles. You're thinking these in your head, and you're thinking, okay, well, this is making a move. This means this, and then you start tinkering with it. So for me, if I can move, if in a management, I'm as much hands off as I can. I prefer to move it basically once a day. That's ideal. Once a day I move it, and that's about it.
When you say once a day, there's always I guess parameters there. Some people are saying I'm going to move it below the low of the day. Some people are saying I'm going to maybe even go with like a trailing stop so it does it automatic. These things take time to develop, and of course, they always have to be changing. In the case of the gold trade that you had on the other day, that was just a beautiful demand zone. By the way, nice call on that one. I was in the room when you guys had your Trader Summit and saw that one out there. I'll bring it up here on the screen just so our viewers can see it. You'll notice that this dipped down on the 26th. This is the level that they had mapped out. I came right down into a demand zone and abruptly ripped. I mean, it was a great rip out of there. That's one of those ones you go, yeah, baby, nailed it, right? It started. What was your kind of target on that one? Were you expecting it to rally up to 1800, or were you saying, hey, I think we're gonna get to the 1790? Like, what was your objective on that one?
That's a good question. That's why I kind of like that. It's kind of the hands off for me. For me, my objective is I take every trade that I take. I look at from the bigger picture, the daily, the weekly, the monthly, and not only was that area a demand zone, but it was also going with the daily, weekly trend. It was also at a daily support and resistance area, which we can say now.
Yep.
But it was, and it was an area that was not fresh, but it was just a good area in the context of the bigger picture. And when I take a trade like that, for me, what I do is I take a target that's an easy target. So I take one target that'll put money in my pocket that doesn't necessarily need me to move a stop or anything like that. So at least like a 2-to-1 or something of that nature, a 2-to-1, 3-to-1 at minimum. Mm-hmm. And it depends on the chart. So for me in this particular trade setup, the 1773 area was basically my initial profit target, or 1772 if I remember correctly. That was a place where you can see that there was some, basically that was a support and resistance area. And if it made it back up to that, that would give me a good solid 2-3-to-1. And if I take, say, half my position, I'm already covered. Even if I don't move my stop, I'm already covered. It comes back and stops me out at my original stop loss.
Right.
After that, I literally shoot for the bigger, I'll look at the daily, weekly, and I'll look at where the opposing supply-demand area is or the support resistance area is on the big daily, weekly time frames.
And that one, obviously, you probably got out of some at that 1772. I was watching it yesterday, cheering you on as I saw it have that huge rip up to 1800. I was gunning for you. I like that you move your stops up every day, maybe once. Sometimes I do it a little bit more than that because I'm a little bit more of a frenetic trader. What are you doing against that 1800 mark? We saw it spike up there. I've got the chart up here right now. It spiked up. When you have this big aggressive move like we did early the morning on the 30th, we went from 1775, ripped up to 1800, 25-point move on gold. It's a pretty good move. I mean, it's certainly enough to put some, if you're looking at $10 a tick, that's quite a nice chunk of change there.
Yeah, I'm happy with that. But actually, how it actually behaved at 1800 was important for me. So if that would have made that move sharply up to 1800, my management would have probably not provided me as much profit as it did, because if it just moves straight up, what I typically try to do is like I say, once a day I'll get on at 5 o'clock Eastern. And that's when I look at the charts and I'll say, okay, well, do I have to modify anything? And at 5 o'clock, if I see that there is a bit of basing or a new demand zone formed, or it broke a major area of, say, resistance and that's now support, that's where I'll move my stop. Like I'll move my stop just below there. And what happened is that, fortunately for me, and I even let the Traders Army people know this, this morning. I told them this morning at like 5:30, 6:30 in the morning at one point, I said, hey, if it breaks down below the 1790, I think it was 1793 that I warned them about. I said, if we close below there, it's probably a good idea to get out, because we'll probably go down to basically back down to 1773. And that's what I alerted them today. And sure enough, it did that. But the market behaving at 1800, basing like that gave me personally the opportunity now to say, hey, there's the judgment call. If it starts to break there, watch that, because then it could be in a free fall. If it didn't base like that, I would have had an issue.
Yeah.
Because then my stop still would have been, because I had moved my stop to 1773, just below that pivot, that area of demand, and it would have went all the way back down and gave back all that 25 points.
Right. Do you mentioned you kind of move your stops up on an intermittent basis and once a day, depending on what you have to do. Do you use trailing stops? I mean, I know it's a matter of personal preference. It's like, do you like to have, manual transmission or automatic? What's your take on trailing stops?
Yeah, it's definitely a manual trailing stop. I heard Ryan Watkins years ago coined he called it a technical stop. Yep. I remember. And for me, that's how I prefer to do that, because I haven't found anything automatically that works. I think an automatic trail stop works great in a ballistic move, like a huge ballistic move one direction or the other, because there you never know what's going to happen, and usually a significant retracement is going to start significantly more retracing. But yeah, it's definitely a manual technical stop. Just judging how that market. I mean, I'm a big believer. I make it pretty simple. To me, I ask myself the question: who's in control? Is it the buyers or the sellers? Once I know who's in control, then what I do is I ask the other question, the if-then, if you heard me on the summit the other day. If the buyers are in control, where do they relinquish control? And for me, that's why that basing was important, because if it goes below that basing, that shows me that the sellers are now coming out to play, and they're now pushing against those buyers.
Right.
So the buyers, where are they going to retreat? Well, they're going to retreat to the last known imbalance, which was 1773.
Yeah, it's interesting. I want to add my little 2 cents on to the discussion of trailing stops. And one of the things, I'm a fan of trailing stops because it allows you to just remove all emotion and judgment and just let the computer do its thing. The challenge for those of you who are looking at trailing stops becomes, what do you use? What increment do you use? And this is a good example here on this gold chart. I'll bring up full screen for you guys. I added a blue line. Let me take off the volume down here at the bottom. We'll just disable volume. And you guys can see this blue line at the bottom that's oscillating back and forth. That's your average true range. And basically what that's telling you is how much this beast is moving in a 1 hour time window. So let's say that in the wee hours of the morning, last night, you put a trailing stop on your trade, and it was down here. You see the blue line's trading at 327. You go, okay, I'll use a $4 or 4-point stop loss on gold. Well, all of a sudden, that $4 stop loss no longer is adequate because it's up at $7 moves, a $7 range. So the problem with a trailing stop is usually it's fixed, right? It's a fixed number, and as that price or volatility changes of that security, your stop may no longer be adequate on that trail. Now, some people use percentage stops as well, which is going to be a little more accommodating to your gains and the price of the security. But I haven't seen one that's tied to the ATR of it, which makes that a challenge with trailing stops. So I want to throw that one out there because I know I've gotten a lot of questions on trailing stops recently.
Yeah.
Let's see. There was a question that came through earlier. Let me see if I can bring this one up here. I had a couple different questions for you, and that one was, where was it? This one's from Angel, who actually started off today's show with this question. So, hello, Angel. Thanks for having you with us. Just wanted to ask how you adjust and place stop orders on options. Do you use price level to place the stop, or do you place a stop limit order to lose no more than 3 times the premium you received on the trade? I know you're not a huge options guy, but you're around some options gurus over there, Traders Army. So what are you looking for?
Yeah, I mean, for me, it's always been price levels. It has, since my expertise is not on the option side, I'll stick with the chart side. So for me, if it crosses a particular threshold, that's when I just activate the option. I exit the option. But it's just price levels. Again, I probably don't have enough experience or intelligence to understand, what anything else besides that. So right. When it crosses a threshold, I'm out, basically.
I love your simplicity, brother. That's the way it should be. I'm right there with you. With regards to options, it's a little bit different. Certainly, whether you're buying or selling, and there's other variables that go in place there. But for Angel's question, if I'm a buyer of options and I'm just basically my max risk is what that option is worth, I'll define going into the trade how much I'm willing to risk. So let's say I bought $5,000 worth of call options, and I say my maximum loss is going to be $2,000. I'll look at that option and say, okay, once it drops $2,000, I'm going to get out. Of course, the value of that $2,000, I'm going to do my best to align that with price levels on the chart, just as Justin pointed out. To me, that's the first and foremost thing we should be doing and saying, if price does start to drop, I'll be bailing on this trade. And I'll give you a good example on Justin's gold chart here. Let me take off that ATR. And if you just look at the lows after it spiked up and reached 1800, right? It ripped up, broke 1800 at the wee hours of the morning last night on the 30th. Well, that 1795 mark, let's say you bought call options thinking, it broke 18, it's now going to go to 1900. Well, if you bought call options at that point, great. But if it dropped below 1795, I'm dumping those call options. I want to make sure that I'm out because there's a reason that level was established. There's a reason that it's staying above it, and now it's no longer above it. So my trade is no longer valid to me. I'll bail on that one. So I predominantly am going off of the levels like Justin said. That's the easiest way. I don't have a set percentage amount like some people do. Mine is just off the levels and what I deem to risk per trade in that situation.
Yeah, I agree. And it's also obviously like the whole goal of the goal of the trade, right?
Mm-hmm.
There's sometimes I don't exit an option position because I'm literally using it as a hedge for another position. So,
right. I want to ask. There's two questions. One was a recurring one that came in from a viewer, and let me bring this bad boy up here because it kind of ties into the second question I want to get to. I know you do a lot in the financial realm and the financial world, and I want to get to that. But CG asked this question a couple days ago, and I think it's been a very valuable one for the viewers to hear from different traders' perspectives. And the question is this: if you could go back in time, knowing what you know now, is there anything that you would tell yourself about trading to be aware of, or to care less of, or care more about? It's a long. We only have a few minutes here, but
I would say that I think you have to be aware of the fact that you start here, you don't know anything, you need to learn as much as you can, but then once you get here, then you need to forget about 90% of what you learned. You need to boil it down to simplicity. So for me, oh man, I can tell you, for me getting involved with, I'm following a lot of different instructors over the years. I think for me, it's important to recognize that you take what you can from each instructor, but you have to mold it into something that's going to work for you, because the way you understand something isn't the way that they're explaining it, and it's not the way that somebody else understands it. Mm-hmm. So take your foundation that makes sense from a logical, rational risk standpoint, and go from there. Make something that you can make a decision off of. Because if you're just waiting for somebody else to make the decision for you, like some of these, these gurus and stuff like that, man, you're not gonna do it well. You may copy them and make a little bit of capital here and there, money here and there, but you have to have something that's consistent, repeatable. That's something that you believe in, that makes a decision, that you can make a decision and make it as simply as possible.
Mm-hmm. It's funny you mentioned some gurus that just pick levels out there and you might make money off it. I think it's rather interesting after reading some legal documents and actually showing that particular guru loses money, but I don't want to mention any names. Let people follow false idols. Cool. Well, good. It's funny for me. It's interesting. Mine was, don't focus on making money. I was so obsessed with making money, I lost sight of what the most important thing in trading is, which is not losing it. And I got my butt handed to me early on. And every time I started thinking I'm going to make X amount of dollars, I would actually lose much, much more. So I finally just said, forget it. I'm just focusing on my losses, and then things start to get better and better and better. And sometimes, when you have that attitude of, I just want to make sure I don't lose a lot or don't lose more than I define, all of a sudden you have these huge winners, and it's just like, I didn't really do anything special. I just didn't lose. To me, that was one of my major learning lessons. Let me ask you this one. You have been involved in the financial markets, you mentioned, for about past 13 years. And I know that when I worked with you as an instructor on Trading Academy, you have a sense of altruism to you. You're always trying to help people out. The guy who'd always stay late in class, always trying to help people out. What was it that got you into the financial markets in the first place? And I guess where's your path headed now?
I mean, obviously what got me going in it was, obviously to try to make another stream of income. I thought I was a golf pro at the time, and I just felt that this was a good way to maybe make a little extra money. As I got more and more into it, and I saw that you could make a lot more money. I started missing the part of being around.
Uh-oh. Put him on hold.
Actually,
there you go.
What's that?
It all of a sudden put you on hold for a second. You're back though. Come on. You're all right.
Oh, okay. Yeah. It gave me a way to kind of interact with people again, because trading's pretty isolating.
Yeah.
But it allowed me to interact with everybody and stuff like that. And boy, did I learn a lot from teaching people over the last, how long have I been teaching? Like 11 years, 12 years now. And my path now, I'm obviously helping, I'm still helping out at Online Trade Academy. I'm also helping out at a lot more involved now with Traders Army, helping Chuck and Corey, because I think they do it. They're a small company that can, Chuck gives out his freaking cell phone number to help students, which is awesome. You know what I mean? So he's there to help people. He genuinely cares. So I'm helping Traders Army, but I'm also thinking of how I can help people another way as well. So I'm starting a financial services company called the Proactive Investor. Do you recognize the name?
Yeah, kind of sounds familiar.
But basically, what I've seen over the last 10 years, and you could probably join in with me here. The biggest problem that I see people coming into this, our average student coming in is about right in there, kind of 55. Primary concern is retirement, and you see a lot of those folks just not accomplish what they want to accomplish. You see some accomplish it, right? Their goals, but you see a lot that don't. So I started to figure out a way, like, what's the biggest issue? Is it the time? Is it the effort? Is it just not knowing, not staying disciplined, all that kind of stuff? And I thought of ways that I could help. So this whole financial services company that I'm doing is going to be 3-pronged. For the folks that, hey, they want to learn and they want to go after the market, they want to make money, they got to get educated. So I'm going to direct them to like Traders Army. For the folks that, hey, they want to be involved in the market, but they just want somebody's advice on how to do that, that's kind of where my advising service is going to come in. And then for the people that just look, I'm scared, I got my tail between my legs, I don't want to lose, I just want to make sure that I have some kind of guaranteed income, I want to make sure that I don't lose money when the market goes. I've got like a safe category, which is going to be primarily looking at things like annuities and stuff like that.
So the 3-pronged approach, well, congrats. That's a pretty big step to be doing the whole financial services thing. I shied away from that one years ago. I mean, you probably have you're a better man than me. I just couldn't deal. I know when the markets go through ups and down phases. During the up markets, everybody's happy. When those markets start to drop, your phone's gonna be ringing off the hook, brother. So more power to you. Better you than me on the services side of things. But congrats. That's a big step for you. You excited?
I'm excited, yeah. And yeah, I agree. I mean, getting phone calls from people is going to be tough, but I already get phone calls from people. I already get emails from students and stuff, so, I guess I'm fine with that. I don't want to concentrate too much on the advising part. I would rather them either get educated or be safe. But because that's the 2 paths, man. Risk, reward, or no risk, little reward, right?
Yeah, absolutely. Since I got you there, what's your take on annuities in general? I know that they get a bad rap. I have a little bit of a jaded view on annuities, but I'm sure that as part of the services, that's something that need to be considered for people's retirement accounts and investing accounts.
Literally 2 years ago, you would have said anything about annuities, I would have shot it down, just like, I'm sure. Because again, what like me and you were talking, look, you can set up a simple bond ladder, but to replace what annuity does. But what you can't replace an annuity is statistical probability, the law of large numbers. You know what I mean? What an insurance company can do is something that none of us can do, right? And they can take the probability and they can spread the risk among everybody. So therefore, me and you as individuals, we don't know all the variables out there. We don't know when we're going to die. We don't know what we're going to need, all that kind of stuff. So we don't have the numbers behind us. We have all that risk, without any real guarantee. But the insurance company has the numbers, right? So the insurance company can spread out that risk, and what they do is they make it safer. Now you give up things for that, right?
Sure.
You're going to give up some percentage points for that. But things like fixed index annuities, the type of products, if you know somebody that understands that world, you can find things like fixed income annuity products that don't lose when the market goes down, but guarantee your participation up to a certain point when the market goes up. So for that 55-year-old that's coming out, that's I know this one guy, Eric, heating and air guy here in Charlotte. He's 55. Him and his wife come in. They're like, man, we have about $300,000 worth of money. We don't know what to do with it. And they became students, but really what they wanted is what? They just wanted, I just want to protect myself if the market goes down because I want to make this $300,000 last the rest of my life.
Right.
How else are you going to do that other than learn how to trade on your own or get a product that guarantees you an income for life? Those are the only two ways, basically.
Yeah.
You can't trust somebody else to advise you for that,
Yeah. And of course, there's risks involved. If you're trying to learn that at the very beginning, you'll make all those novice mistakes that most people do when they start out doing this. The important point there for those of you that listen to that thinking, hey, I'm going to go out and buy an annuity right now just because what Justin said sounds amazing, which was, look, there are investment products out there where you won't lose any of your principal. It sounds phenomenal. However, in those same products, you are going to be paying fees, but that's just the cost of doing business if you don't want to do it all yourself. Also, keep in mind that let's say the market has a 50% up year. You're not going to participate in that full 50%. It's going to be capped, and this is why it's important to shop around and understand that there is going to be different annuity products, and one might have a cap of 8%. One might have a cap of 10%. It's going to vary from firm to firm, so make sure you guys check it out. They can be great products, but they have to be the right products to fit you, so be careful in their selection out there.
Yeah, I 100% agree with you on that.
Awesome. Let's see. One last thing is since the markets are ripping right now, we have the all-time high flirtation going on for most of the major market indexes. I'd like to get your 2 cents on what you see happening in these markets and where you think we might be headed.
Go long until you're proven wrong.
There you go. You make it so easy.
Well, I mean, the fact of the matter is that. I mean, you and me have been around a lot of folks that keep calling the tops and tops and tops and tops and tops. But you know why they can keep calling tops and tops and tops? Because it keeps making tops and tops and tops and tops and tops, right? So again, you go with the flow. What's the old stupid saying? The trend is your friend until the bend in the end. Well, you keep going with it until it breaks. But you have to know what to do and when to recognize it breaking.
Yeah, I agree. It's tough because my gut just says, God, this is just a steaming pile of doo-doo that the Fed is creating here with all this purchasing, and it just hasn't broken. It hasn't broken, and it doesn't seem like it's going to. So, trend is your friend to the bend at the end. We had a little bit of a kink, but no bend too much.
I mean, you got it. You and I are on the same page, man. You cannot tell me that any of the fundamentals justify where we are but so it's digging at you, aren't it? It's digging like it's the same in me. It's like, man, I want to short, but you got to go with the technicals. It's up, go with it.
Yeah. Even the fundamentals, you're right. The fundamentals. I'm saying, I think I read something today that the European Union, the European markets had like their best year or best quarter in 5 years. It's like, hold on a second. We've got Brexit issues, we've got economic issues, we've got negative interest rates, we've got coronavirus problems, but all-time highs. Let's do it. Let's rock. That's bizarre.
But Merlin, that's not saying anything. That's not saying much about the European Union anyways.
Careful. We got a lot of European viewers out here. They get all upset when you start talking European.
But they understand their markets, though.
I know. All right. You mentioned you're working for a few different things. So are you still doing XLTs for Online Trading Academy?
Yeah, I'm doing usually, I've been scheduling basically about 3 or 4 XLTs over at Online Trade Academy, and usually 2 live trading rooms over at TraderMerlin.
Nice. So there you guys go. If you want more information from Justin, you can go to tradersarmy.com or go to tradingacademy.com as well. Either or, you can shop around, or maybe even have both places out there. Justin, thank you so much for coming. Actually, before I cut you off here, you got those 2 of your classes. Anything else that you got coming up here that I want to share or you want to talk about?
No, I mean, okay. I'm starting my own website, old company. It's actually a temp website up right now, but I'll get to that when it gets to it. So
we'll talk about that when you're live.
All right, man.
All right, thank you so much, Justin. Appreciate it. Have a fantastic day, my friend.
Thanks, Merlin. Too.
Take care.
Bye.
All right, guys, that was Justin Krebs. He's over at Traders Army and Online Trading Academy. So some of you actually saw in here, you had Ray talking about Justin's XLT session. Glad you enjoyed that one. Always a stand-up guy with just a lot of great knowledge. One thing I find interesting about Justin over the years is I like to look at people's backgrounds and past, and that's why I always ask them, what have you done in the past? Meaning, what was your career? How'd you get here? A lot of times engineers will struggle as traders simply because for them 1 + 1 always equals 2. It cannot equal anything else. If it does, then the whole structure that they're building doesn't work anymore. The bizarre reality of trading in the equity markets, the futures markets, the Forex markets, whatever market it is that 1 + 1 is whatever number it needs to be. That's a real challenge. And coming from a background where he's a professional golfer, every day, every hole that he goes and plays, there are different factors facing him. There's different wind, there's different lawn, there's different trees, there's different water hazards, there's different sand traps. It's always going to be different. And for somebody like Justin, I think it's probably a bit easier because he says, there's certain things I need to master. I need to master my swing, which of course I would say would be your rules, right? With the plan to execute your trades and how you're going to do that. And then the ability to follow your rules, but also to adapt to all those changes as they come your way. So for someone like Justin, I think it gives him a lot more flexibility and, to be honest, a competitive advantage in the markets because of that flexibility. Whereas I know there's some engineers in this group right now. I know some of you are frustrated in trading because it is sometimes whatever it needs to be. 1 + 1 is 7. You're like, that doesn't make any sense. Crazy. All right, again, if you want to see more from Justin, you can go to Traders Army or to Trading Academy. He's in the XLT sessions there. Tom says U.S. just had its best quarter since 1987. Yeah, maybe that was the number. I read a whole bunch of stuff today, and it fries me. But yeah, bizarre that we're in what seems to be the worst quarter ever, and all of a sudden it's the best quarter ever. Cuckoo! Oliver, thank you so much. Also, Taylor, I was a little bit late in thanking you guys for your contributions. I do appreciate that. You guys have questions, Taylor or Oliver, send them on in. I'm glad to answer your questions and get you in to participate on today's show. Let's see. What else did I do? There was one other question that came in here. No, where did that one go? There was a question about... yes, let me bring this chart up. Let's see if I got it here real quick. I had this question all set. It was FNUG, I believe. FNUG. No, where is that one? FNGU, excuse me. So I'll bring up FNGU. Now, this security out here is coming from a couple different people have been asking about this one. This is an ETN, exchange traded note. It's not an ETF because it doesn't hold the assets. It's a derivative of an index that tracks basically FANG stocks. And this is a triple leveraged ETN on basically the FANG stocks. And just so you know, there's about 10 that are in here. I believe you're looking at Facebook, Apple, Amazon, Google, Tesla, Twitter, Nvidia, Alibaba, Netflix, and if I'm not mistaken, Baidu is the last one that rounds that out. So it's not just straight browser stuff, guys. You've got Tesla in there as a FANG stock. Seems kind of odd. Basically what they did is you create this small little index and you go through the NASDAQ and say, what's the best performers? Which ones are the best 10 out of there? And they made a small subset index out of that. Smart, right? And obviously if they're the biggest, that's what we should be doing in our trading is if you got a series of stocks that are rallying to the upside and they're the strongest, you want to ride those ones. So this ETF is a great way to do that. However, this is a triple leveraged ETF. And Tom, you did a lot of great research here. Unfortunately, I can't read it all, but he started talking about the amount of number of losing days and winning days for the security and really did some analysis on his own. And it's real interesting because he talked about, I do a trailing stop of 10%. And I'm going to read you the last sentence that Tom sent here, which I think is great. He said, I would summarize that FNGU and similar triple X ETFs are high risk, high reward. Very true. They can be extremely dangerous. When I was in the classroom teaching, one of the biggest losers was FAX and FAZ, the triple financials and bearish financials. People were getting murdered with that one. This one's not going to be any better, right? FNGU, that's a triple ETF. And he says, I would summarize that FNGU and similar triple X ETFs are high risk, high reward that can be very low risk, high reward when with a trailing stop. And if you go back to what I've talked about over and over again, certainly about my trading career in the early days, was what part of it matters? Making the big 10% gains or losing the 10%? Losing the 10%. So what Tom's saying is, hey, I just put trailing stops on it at 10%. And when I get out, it tends to drop a little bit further, and I'll buy back in and get to the next move up. Especially when you have something that's been in a move like this has been in. It's been in an absolute tear. Yes, there are some pretty significant drawdowns, but you're buying those dips. And actually, this most recent one came right back into a demand zone. Perfect one. You can also look at something like ATR, which I talked about quite a bit, and show you in determining what your stop might need to be. You're looking at something that's trading $100. It moved today about $7. Well, it's moving average of average to range is about $7 per day. So, you set your $7 stop loss. That's a 7% stop. Maybe do 8% so you incorporate the entire ATR. And now you're giving yourself a little bit of wiggle room here. But what you can't have happen is you cannot sit here and ride this thing down 20 or 30 or 40%. If it drops, 6, 8, 10%, fine. Take your licks and move on. But obviously, this is one of those examples of buying the pullbacks because it's just been an absolute uptrend, and these are the 10 most popular companies that are just dragging this market higher and higher and higher. It just keeps on going. Joseph says some AAA ETFs are being delisted. Yes. Remember, a lot of them have popped up. There have been dozens and dozens and dozens of ETFs pop up, triples. There was actually, at one point, there was discussion to have a 10x ETF, which is just, you got to just kind of put your head in your hands and go, you got to be kidding me. These guys can't make money with a regular 1-to-1 or a double or a triple, and now you want to throw a 10x at them? That just seemed absolutely nuts to me. So that one actually got moved away. Tom said it just shifted from 10 to 5% trailing stop. Probably better. Now, if you notice that, Tom, if you did that, just based off what I'm seeing here now, it's moving about 7%. So that might be a little bit of a, you might be a little too tight, but that's still fine, right? I'd much rather you lose 5% than it drops another 3 or 4 or 5% and you buy back in even cheaper. So, this really hasn't had that many aggressive down days. It had a couple you see here on the screen. Basically, the worst one was the 26th of June. Other than that, the down days haven't been that dramatic. So good. I think you actually, it's a fairly decent strategy. You just got to be careful with it. This is one that if you lack discipline, if you don't follow your rules and you're not going to take a stop, something like this can absolutely tear you apart. And Tom, from the messages you've sent me, I can tell you've got discipline down. So it's going to work for you. Mark says FNG is more commonly known as effing new guy to refer to the new coworker. Nice. I like that. That's good. What else we got? Surely they are good for date. Yes, GD says, are they good for day trading? Yeah, they are good for day trading. That's really, I think, what they're designed to be, is this short-term intraday vehicle. I have done it in the past where I show a lot of the time value of these triples. And I can, maybe if I can find the slides, because I don't want to recreate everything. It was really interesting how you had over time, the longer you hold a triple leverage ETF, the more it loses. And even if the underlying goes right back to break even, this one would be losing money. So the longer you hold them, the worse they're going to be. Let's see. Pro35. Are ETNs basically the same as a K1 MLPs? No. K1 is a limited. It's I believe it's multi-limited partnership, something like that. You're actually a partner in the company. An ETN is just simply a company that doesn't own any of the underlying assets. So you have an ETF, which is an exchange-traded fund, right? So ETF would be like SPY. That SPY actually does own the shares in an account somewhere of, at least that's what they say, of each stock, right? So there's value there. If you look at something like SDS, which is a double inverse short SPY, it's an ETN. It doesn't have those shares. It's a derivative of SPY, so it doesn't actually hold any shares. So that's the difference. MLPs, I'm not an expert in MLPs. I actually have one. USO, I believe, is an MLP, where you get, it's totally different taxation. You're actually part owner, and there's all kinds of weird stuff that goes on there. But I, unfortunately, Pro35, I don't know. I don't know that one on the ETN. Rajesh asks about FDX. It's funny you mentioned FDX. This is actually on my list tomorrow as a potential short trade. I actually have two securities I'm looking at tomorrow that have a very similar picture. I actually really like Fedex. Now, they had blowout earnings. Their earnings were great, guys. Let me show you. See if I'll bring up the earnings calendar as I kind of wrap up today's show. Fedex just butchered earnings. It was great. They did so well. Let's go to... Let me see. Where did I not bring up the FedEx earnings announcement? Oh, Merlin, you're killing me. sometimes I disappoint myself. I had this all set up and ready to show you guys the earnings for FedEx, and I didn't end up showing it to you. Let me bring it up here on the screen just so we can share it with the viewers at the just so you can see what happens. I use a bunch of different sites for earnings. I know some of you guys have been asking. Zax.com has one that I like just because of the way that it's laid out, and I will do my best to get that up here in just a second so you can see what happened with FedEx. Because FedEx, obviously judging by this chart here, you can tell they did pretty well with regards to earnings, right? Well, they were smoking to the upside, and come on, there it is. So here's your earnings calendar for last night. You guys can see right here that FedEx Corporation, they beat earnings by 78%. They were supposed to come out with $1.42. They came out at $2.53. I think that was, it's not really a surprise to me. I mean, you look at everybody is shipping stuff right now because, a lot of stores are closed. So Amazon, eBay, all, using distribution channels through FedEx and UPS, obviously going to be very good. Now, check out what happened with them. It's not like they were just recently spiking up. They'd been doing rather well over the past couple of months, but they jumped up right into an area of supply. And if I were to draw my supply zone on this bad boy, I mean, you're looking at it right there, looking between 163 and a quarter and 165 and a quarter. And we peaked today, dead center of that one, of 163.65. So we're right in the middle of that range. Now you have this giant shooting star, but that's not the part that makes me get all excited. I mean, these two factors alone would make me think about trading this tomorrow. But then there's one other factor here, which I'm going to add on the bottom of your chart, which is volume. Look at the volume spike. Its average is 2.8 million shares traded per day. And you can see that blue line at the bottom. That's normal, right? It seems to be very, very low. Only one time has it traded higher than what it did today, which was 17.9 million shares traded hands today. That is a huge, a factor of 6? Are we talking about 12? Maybe a little bit more than that. So anyway, a huge day for FedEx. As far as how to trade this or what to look for tomorrow, I'll be watching it right here. Drag that line down. If we open up above 155.75 and then close below it, I'll be looking for a short and looking to fill that gap to some extent. Of course, it all has to wait for confirmation. I need to wait for those things to happen. I don't know if it will, but I'm waiting for that to happen. We'll see. Okay. Yep, Joseph says leverage ETFs are mathematically reset every day, only good for short-term trading, which is why there's that decay. That's the unfortunate part about that decay. Gapped into supply. Yep, I think I already answered that one, Joseph. To me, I'm looking at going short on this one, but I want to let it confirm. It has to confirm. People, look at the amount of volume today. People bought this on the earnings announcement. It shot it up, and all of a sudden we ended on a very weak note. That may lead to much more downside movement tomorrow, but again, I have to wait and see for that to happen. I'm not going to just open up and short FedEx. I need to wait for it to confirm and go into my rules. If it doesn't fit my rules, then I'm going to move on and do something else. But all in all, I think that's a beautiful looking potential short. The other one, what was the other one? I think it was Western Union. Yes. It's nowhere near as good, honestly, as the FedEx one. But you see Western Union also had this nice little shooting star here. But it's been in a downtrend for the better part of 3 weeks now, and it had a topping tail that came right up into this little area of supply. So that's another one I'm keeping my eye on. It closed at the dead lows at 21.69, but there's no volume on this one, so it'd be a smaller trade. Nothing I'm that excited about. It's the FDX that I really, really think is going to be a good one. All right, any other last minute questions for me? Let me go here to the TraderMerlin email real quick and see if I got some there. No, all right, we're good there. Okay, so let me see. What do I have cooking for tomorrow? Tomorrow we're going to have Sam Evans on the program. That's right. Sam will be back. I believe now he's going to make his official announcement. He's been like holding off. We'll talk about his announcement plus a whole bunch of other things. We haven't quite come up with a topic. If you have something you would like Sam and I to discuss, if you get it in soon enough, maybe I'll make that the little thumbnail graphic for tomorrow. So let me know what you would like Sam and I to talk about. If you would, go ahead and put it down below the comments on our YouTube channel here, just so as I review that video tonight, I can see it. Maybe I'll make that the topic of discussion for tomorrow. Obviously, we want to do topics that you guys would like us to discuss, not what Sam and I want to talk about, which we could talk about anything all day long. GD says, what will you look for to confirm at the open? GD, I wanted to open, you're talking about FedEx, I presume. So what would I be looking for on FDX? I'll put a little yellow box. Basically, I need FedEx to open anywhere above 155.76. And that's that yellow box. Anything above there, if it opens up at 150, trade's broken to me. It's not following my rules. So if it opens up somewhere in that 155 and change, and then drops down below 155.76, then I'm gonna be going short. That's it. Pretty simple. It's just a basic rule. I know many people will trade it very differently, but that's a rule that I've set up for myself many years ago, and it's prevented me from getting myself into trouble. I will actually, prevent myself from forcing a trade. As you guys know, forcing a trade can be a very dangerous thing. All right. That will do it. Again, if you like today's show, if you like having Justin Krebs on the program, do me a favor, click the little thumbs up on the YouTube page as well. If you are new, click the subscribe button or the little bell so you can see all the different programs that we're releasing. There's more stuff coming out on the TraderMerlin YouTube page as well. So if you liked it, give us some thumbs up and share the love. If you want a specific topic for tomorrow, put it down below in the comments on our YouTube page there, just so I can get them all ready with Sam Evans on tomorrow's show. And to find out more information about Justin Krebs, you can go to Traders Army or to Online Trading Academy, where he teaches at both those companies. That's it for today, everybody. We'll see you tomorrow. Take care.